Good to see you again. You should be ordering copies for your library and for others as well. Don't forget to support us. It's very important. Okay. Last class we started, accounting for issue of shares with payment in installment. And I want to believe that at this level you understand exactly, the various aspects that we've talked about. Okay. We're able to explain that a business organization or a company, of course, that have the right to do that, or that is qualified to do that, raises funds from members of the public by issuing shares, that is inviting the public to come and be part of the owners of the business, and then whoever is interested pays for it. And I said that of course you can ask them to pay immediately or outrightly or in full, okay, or you can decide to collect the money from them, instrumental, that is bit by bit, based on when the fund is needed. So we've looked at a couple of classes where we were able to account for such funds paid in full, and then we began accounting for funds that were paid for by the shareholders or the investors instrumentally, okay? And then if you recall, I told you that if you have to receive funds or cash for shares applied for by the investor, you can decide to get it in bits, of course, instrumentally. There is application, then there is allotment, then start making calls. Of course, first call, then you have second call, and all that. So I explained earlier that in making the call, you can actually have scenarios where the applicants or the investors or the shareholders would not honor the calls as at when due. Okay? And in that scenario, there's a way we account for it. Okay? So I mentioned that there's something called call in arrears. Okay? So what we're saying is that the applicant, of course, has paid upon application, has paid upon allotment, but when there is a call, it could be first call, it could be the second call, or any other call within the instrumental, band. The idea here is that the investor, as at when he has been called to make that payment, okay, did not honor that call. That is, he is yet to pay, or was yet to pay, or had not paid, that amount expected from that call as at the point of reporting. So basically today we're looking at accounting for call in arrears. Of course, you can look at it as well as what you can see outstanding call. Okay, right? Or we can as well also said unpaid what call. All right, so the idea here is that the guy is yet to what pay for the call, or is yet to honor the call. So I will explain. The other time I talked about raising 1 million naira. So let's use that figure again. So let's say we have, we talked about what 5 installments: application, we talked about allotment, then first call, second call, and then third call. Okay, so of course we're looking at nominal value of 1 naira. We're trying to raise 1 million naira, so that's 1 million shares at 1 naira. So of course we can have it spread here. Let's say 10 kobo, 20 kobo, 30 kobo, and here was 10 kobo. So we have 20, 30, 60, 70. So here was 30 kobo based on the illustration. So we're not saying that, of course, upon application, the guy pays 10 kobo for the units that he has been, or he applied for. Upon allotment, he pays 20 kobo for the unit that was allotted to him. Then, first time we called him to pay 30 kobo, okay, for the allotted shares given to him. Second, call 10 kobo for the shares given to him. Of course, there will be a third call, 30 kobo for the shares given to him. So what we're saying is that at certain points here, it could be first call, it could be second call, it could be third call. What we're saying is that at the point of reporting, the guy has not honored a particular call. Okay? Now, the idea here is that upon allotment, of course, it means that, well, don't forget that what we want to raise is 1 naira per share. And then we're trying to get it instrumentally. So the moment we allot shares to you, we expected to get all the money from you. So apparently or technically, upon allotment, before upon application and allotment, you are assumed to be owing the business technically the unpaid what calls. Okay, just that there's a timing for the call. So we're not saying that when you were called, you did not honor. So as at that time, if we're reporting and you've been called and you didn't honor, okay, it makes you a debtor in the report. Okay, so what we're saying is that you are owing, or we're establishing the fact that you're owing the business as at that point of what reporting. Why? Because there's an amount of money that you ought to have paid for the shares allotted to you that you are yet to pay. So technically, you're in the band of a debtor. Of course, debtor are what assets. And don't forget, we have already explained that in our previous classes. You can also take your classes on, double entry, where you look at the behavior of assets. Okay. Now I told you that your trial balance, of course, if you remember, I told you that your assets behaves, and then have a debit balance. Of course, I told you that your liabilities behaves and have a credit balances. Your expenses, debit balances, your incomes, credit balances. Okay? So, of course, if we look at an instance here, let's call this statement of what? Financial position. Of course, you have your assets here. Okay, so let's say our assets here. Let's say we have current assets, or let's call it a non-current asset. Of course, let's say it is 1,000 for instance. And we have our current asset, let's say is 500. So basically our total asset here is what? 1,500. So this is represented by liabilities, okay? So let's say we have a short-term liability of let's say 300. Yes, and then we have our share capital, let's say to be 1,200. So at the end this is 1,500, okay? Now let's assume that we issued, let's say, 100 shares. We issued 100 shares for subscription, and then we're taking these 100 shares, okay, in installment. So let's just say application and allotment, okay, excuse me. Okay, let's say that is 50 kobo. and then first call, let's say 50 call, and that's just it, just we made just one call. So apparently, if we're selling 100 shares at 1 naira, we're trying to raise how much? 100 naira, right? Now, application has been paid. Now, we expect that when we make the call for this first call here and the final call here, we should have 50 kobo multiplied by what? 100, which is what? 50 naira. Okay? So we should have 50 naira here. Now, remember that it flows to your bank. Of course, someone is paying. And if your bank, you're receiving money from by debit your bank, right? So that means we have application. Remember that 50 naira. So we're going to have application here. Bank will be what? 50 naira, right? So we expected to have first call, which is bank here, to be what? 50. And then we have first call to be what? 50. So everything is 100 naira in the bank account. But now, what we are saying is that upon this first call, let's assume that what? The investor would not pay for what? Let's say 10 shares, right? 10 shares. All right. Now, if the investor could not pay for 10 shares, so that means that the bank here, what he paid for what? 90 shares. Okay. So if he paid for 90 shares, of course, 50 kobo times 90, right? Right? Because 50 kobo times what? 90 shares. 5 times 9 is 45, right? So if we're now saying 10 shares, that would be 5 times 10, that's 5 naira, right? So now we're saying that what? Bank now, he has paid for the 5 naira, that means he has paid for 90 shares. But he's yet to pay for what? 10 shares. Now, it means that what? The 10 shares that is yet to pay for is what? Call in what? Arrears. So he's paid for the 5 naira out of the 50 naira, but you have to pay 5 naira. So we're going to say call in what? Arrears, which is 5 naira here. So that you can have your what? 50 naira in the first call account, okay, which will now be taken to an ordinary share capital of what? 50 naira. Of course, this will go to ordinary share capital as well, 50 naira. Now, we're going to have what? Call in what? Arrears. So this will now come in as first call. How much? 5 naira. You can see that your call in arrears is having a debit balance here. And our debit balance, according to our rule here, is what? Has debit behavior. So when an item is having a debit behavior, it's more likely behaving as an asset. Okay, so you have a debit balance here. And that means that this ledger here is acting as what? As an asset. Remember, I will say it's call in arrears. The guy has been called to make payment, but he's here to make the payment at the time of reporting. So if we're trying to bring these balances into this place now, you see that we have 100 naira in the bank. Technically, that's what we're expected to have, right? But because of this now, this is going to be what? 45 naira. You can see that what he paid there is 45. He paid for 90 shares instead of 100 shares. So that 10 is in arrears. So that means what went to the bank actually is what? 45. So that means that what we have in the bank here is 95 naira. So if we have our bank, if we put our bank in here, we'll have 95 naira, right? And now our ordinary share capital, of course, you can see that from application, what do we have? We have 50. Then from first call, we're going to have 50. So that means we have 100 naira here, right? So that means our share capital now will increase from what? 1,002 to 1,000 what? 300. Right? So you can see that now. So our bank is nearly 5. But then what we have, our call in arrears here is 5 and it's behaving as an asset. So that will be under what? Your asset now. So call in what? Arrears. So what do we have there? 5. Right? So when you balance up your statement of financial position, your balance sheet, you see that everything here becomes 1,600, 1,000 what? 600. You see? So your call in arrears here is an asset here. But some suggestions will net off the call in arrears from the share capital. So instead of putting call in arrears here, they will not include it here. They will take it out. Okay. Then the share capital here will not be 1,3. Okay. It will be 1,3 minus 5. 10 minus 5 here is 5. That will be 9. This will be 2, 1, 1,295. So your share capital will be what? 1,295. So when you balance up, you're having 5,951. The same thing will happen here. Okay, 5,951. So I've given you 2 approaches towards dealing with your what? Your call in arrears. Of course, that will be one, going by the rule that by leaving your nominal your share capital at the nominal value, okay, and then representing what the call in arrears as an asset, or netting off the call in arrears from the share capital, okay, to have a net value for the what, for the share what capital. But don't forget that there's something called forfeiture of share. So if we argue further, we can say that of course the share has been issued to the guy is supposed to pay. So keeping that value as call in arrears makes more sense, because eventually if the guy forfeits the share, the directors have the right to now sell that share to somebody else. So of course, if you understand it to the point where your call in arrears is represented as an asset, it makes forfeiture of shares, and this account of forfeiture of shares to be what's easy. So what I'm actually saying here is that, you know, so long as the guy has been allotted his shares, he's a debtor to the business, he's fair to pay. The only thing here is that as when we're reporting, we've called him, but he's yet to what, pay. So instead of having the money as what, as being paid into the bank, of course, which is also an asset, we're having it as what, being owed by the guy, which is also what, an asset. Okay, so now you have to, you know, decide on which of the approach you want to use. But you know, you should understand that of course this is as a result of the behavior of the items, either as an asset or liability. That will represent the way we would put them in the state of what, financial what, position. Okay, so this is a summary of what accounting for call in what, arrears. So if you have questions, you can reach me on the numbers displayed. I'll be there to reply you with the right answers. Let's quickly look at this question so we can have an idea of what we're talking about here. So the following represents the balance sheet of Miauchan PLC. We have, excuse me, still of now putting us at 31st December 2010. So we have non-current assets, current assets excluding bank. We have bank. Total asset is there as 14,02000. We have finance by liabilities, short-term liabilities there, reserves there. Then we have authorized shares at 10 million shares at 1 naira each. 1 naira share at 1 naira per share, that's 7 million shares issued already. So we have total liability of 14,02000. So on the 1st January 2011, the company issued 1 million ordinary shares to the public for subscription. Okay, all shares we are subscribed for. An application and allotment concluded at 45 kobo per share. First call is pegged at 40 kobo per share, while second call and final call was to be made at 50 kobo per share. So there are just 2 calls there, first call, second call. So the shares issue procedures came to a conclusion on 30th April 2011. However, as at this date, a shareholder allotted with 10,000 units was yet to honor the second call. You can see there that someone that is having 10,000 units was yet to honor its call. That means the person is yet to pay. All right. So that's the call narrative. It says show the necessary entry to record the shares issued. So this is something that shouldn't give us much headache. Let's quickly look at it and then move straight to okay. So what do we have here? Excuse me. Okay, so here 1 million ordinary shares were issued. So shares issued is 1 million units, right? So we have application and allotment. That's together. So we have application and what? Allotment. I think that's a 50 kobo, right? Is it 50 kobo? No, 45 kobo. 45 kobo. So we have first call there, 40 kobo. First call is 40 kobo. Second call, 50 kobo. So the total here, 50 plus 40, 90. 90 plus 40, but that's 135. That's 1 naira 35 kobo. So apparently, the nominal value here is what? 1 naira. So there's a premium. Premium here is what? 35 kobo. Okay, so having established this now, we know that what do we have here? We have application and what? Allotments, right? So what do we have? Of course, they're going to pay into the bank, right? So how much are they paying? That'll be 45 kobo times 1 million unit of shares. So what do we have? That should be 450,000. Let's check, please. 45 kobo times 1 million. So 450. So we have 450,000. Of course, this will go to a ordinary shares. 450,000. Right? So what's the next one there? First call. First call, of course, going to the bank. What do we have there? 40 kobo times 1 million unit of shares. That's 400,000. So we have 400,000 to where? Ordinary share, right? 400,000. So this is it. Then let's come here. Second call. Now, what happened? Remember they said what? The share issue procedure came to a conclusion on the 30th April 2011. However, as at this date, a shareholder allotted with 10,000 was here to honor the call. So that means there's someone that has not paid for 10,000 units. So basically, what has been paid for is what? 1 million minus 10,000, right? The guy did not honor 10,000. So there's a shareholder that did not honor 10,000 units. So what has been paid for is 1 million minus 10,000. So what do we have? 1 million minus 10,000. 990. So that means 50 kobo times 990,000 is what has been received to the bank for second call. So what do we have? Times 0.5. 495. 495,000. Of course, this will go to an ordinary share. 495,000. Okay, but no, don't forget that there is what? Call in arrears of how much? How much you have there as call in arrears? My call in arrears there is what? 10,000 units. Okay, so 10 that will be 50 kobo times 10,000 units. That's the call in arrears there. So we have call in what? Arrears to be how much? 50,000. Sorry, 50 kobo. All right, times what? 10,000 units. That's 5,000. So call in arrears there will be what? 5,000. So this will give us how much? 500,000. Of course, we cannot take this to ordinary share. right? 5,000, right? So this will be what? Right? 500,000 there. So now we have our what? Bank accounts, credits, debits. So what do we have? Do we have money in the bank? We have money in the bank, 1,350,000. So balance brought forward is 1,350,000, right? So upon application, we received 450,000. Application allotment, we got 450,000. Upon first call, we received 400,000. Upon second call, how much did we receive? 495,000. You can see here credits, debits, credits, debits, credits, debit, right? So that means we have a new balance in the bank. Okay, that will be 1,350,000 plus 450,000 plus 400,000 plus what? 495,000. So what do we have there? 2,695,000. Okay, so our new balance is 2,695,000. 2,695,000, right? So there's a new balance here of 2,695,000, right? So what do we do? The next one is what? Our ordinary share capital. We have credit, we have what? Debit, right? So what do we have there? You can see that from this place, there is what? A debit of 450 to be a credit here. But then, what's the ordinary share capital before we issued the 1 million share? 7 million. So balance brought forward is what? 7 million. So upon application, we got 450. Application allotment 450,000, right? From first call, we got 400,000. Now, second call, of course, there is a call in arrear, but total amount that is flowing to ordinary shares, what? 500,000. So from second call, we have 500,000. Then there will be a share premium, right? Of what? 35 kobo times how many shares? How many shares was issued? We have 1 million shares. Okay, 1 million shares. But remember that there is a call in arrears. So technically, even though we can argue that the share premium, okay, that we've not received what? The premium on 10,000 shares, okay? But then we can argue that this guy is owing the business and what? Will end up what? Paying. Don't forget that your debtors and your what? Bank are both what? Assets. So if the money is not in the bank, it's in the hand of someone that is owing us. So right now, the shareholder is still having to pay us 5,000, okay? So we can argue that we have, the asset either ways, either in the bank or in the hand of the what? Debtor. So here, our share premium, of course, is 35 kobo times 1 million units, okay, of the shares what issued. So this will be 350,000. Yeah. So we have 350,000. So apparently, we're going to be having our what? New balance, which is carried down. All right. So we have what do we have there? 7 million. Okay. Of course, that'll be 7 million. Plus this is 450. This is 900. 900 plus 4. That's 1,350. 1,350,000. All right. That's 8,350,000. So if you minus that from 350,000, 8 million. So we have 8 million here. So we have 8,350,000. 50,000. Wow, we have 8,350,000, right? So let's move the next one here. Of course, we're going to have share premium account. What's the share premium there? Because this is coming from what? Ordinary share capital. So we have ordinary share. How much is that? 350,000, right? So we have kind of 350,000. All right. So the next one there, we're going to have our what? Call in what? Arrears, right? So from here, on the second call, so we'll say second call. How much is that? 5,000. So you can see that we have a debit balance here. Okay. Remember, being a debit balance now, that's an asset, right? So you can see here, Meowcha Limited issued 1 million shares. Upon application, we have 45 kobo per share. First call we have 40 kobo. Second call we have 50 kobo. So, but then at the second call there is what? A 10,000 unit that was yet to be what? Paid. That's the call in arrears you have here. So if you do 10,000 shares, okay, times what? 50 kobo, you're gonna have 5,000. Of course, that's how we got this here. So let's proceed. So of course we have statement of financial position. Okay, that will be as at the period that we are reporting, which started April 2011. Right? So what is the asset there? So we have our assets. Not the asset there, non-current asset there. So what do we have? 9,520,000. The next one there, current asset excluding bank. Current assets, of course, excluding bank. What do we have? 3,150,000. 3,150,000, right? What our bank? Our bank will change here. 2,695,000. 2,695,000. Remember, calling arrears. So we have our call in what? Arrears. How much is that? 5,000. So if you add up, what do you have? 9,520,000 plus 3,150,000 plus 2,695,000 plus 5,000. 15,370,000. So we have 15,370,000. 15,370,000. So this is the total assets here. So this is represented by our liabilities here. So we have our short-term liability, or sometimes you call it current liabilities. So what do you have there? 2,356,400. 2,356,400. Then we have our what? Reserves. Let's call it note 1. So we have our note 1 here. So what's our reserve brought forward? According to the question, we have 4,663,600. 4,663. What's that? 600. So we have our share premium. What's the share premium here? 350,000. So when you add up, what do we have? 4,663,600 plus 350,000. I have 5013,600. So we have 5013,600. So we add up. What do we have there? 2, 3, 5, 6, 400 plus 5013,600. We have 7370. 7370,000. So that's 7,370,000. So what do we have here now? Our share capital now. Share capital here is what? 8 million. So let's do that. 8 million here. So what do we have? 7,370,000 plus 8 million. 15,370,000. So this is the what? Total liabilities. You can try the second approach that I taught you on your own. If you have questions, you can reach out to me. So you can see that the total liabilities here is 15,370,000. Total asset here is 15,370,000. So what we've done here is to account for shares issued, okay, and then in the shares issued we had call in arrears. Of course, call in arrears is where the shareholders couldn't or was yet to pay for a particular share that has been called to pay for as at the time that we were reporting. So here we have a shareholder that was yet to pay for 10,000 units. Okay, so we have that as a call in what arrears. So we're able to account for it all the way from the application to first second call to the bank to the ordinary share to share payment to call in arrears and then to the revised statement of financial position. Okay, so if you have questions, of course you have to go through it on your own again. If you have questions, you can reach me on the numbers displayed. I will get to reply you with the right answers. Don't forget, you can support us by printing the account displayed or pay for copies of my textbook. Okay, that will distribute the students for free. These are the ways that you can support us. So we can continue doing what we do. We're going to continue anyway, but then be part of something that is good. And I believe this is a good course that we are pushing out for. Thank you.